Americans' wealth surpassing 100 trillion ka-ching for the first time ever as rising home prices offset a hit to household assets from that small stock market swoon in the first quarter. Now we look ahead to the midterms because this is the kind of thing you have to wonder, how will it impact not only voting and who controls Congress, but even the economy? Can it feed on itself? Joining us now to discuss, Chris Wilson, GOP pollster, back with us, Erin Gibbs and Capri Cafaro. You know, I was reading something today, Chris, and I forgot the details of it in Axios, but the gist of it was when people vote based on President Trump, the GOP loses seats. When people vote in the midterms based on the economy, the GOP runs away with this. It's like it could be scorched earth. They'll win everything.
It really is. It was an interesting analysis, and what it calculated was, if I understand where Donald Trump is in terms of his approval rating, which is similar to where Barack Obama was at the same time in the first 2 years of his term, is the Republicans would lose about 55 seats. But if you calculate it just on where the economy is, where, as you said, wealth is up, there are actually more jobs available right now than there are people out of work, which may be the first time in modern American history that that's been the case. And when you look at the economic indicators and how they will impact the election, Republicans would be calculated or forecast to gain 68 seats. So from that, it really means that you cannot make you cannot just simply say because Republicans are out of power, right, or because Republicans are in power, that they're going to just lose seats. I mean, right. Frankly, it's going to come down to the individual campaign, and that's the bottom line.
Capri, and that brings me to the Nancy Pelosi strategy. She seems to be focused on dissing the economy, dissing the crumbs, and you know, I would imagine there's some people in the party saying, hey, Nancy, you know what, that might not be the right line of attack.
Right. I mean, there are a number of other things that she can focus on that, you know, I think would resonate at home when it comes to challenging Republican policies. For example, you know, the rescinding of taking back about, you know, billions of dollars from the state children's health insurance program just today in the U.S. House. I mean, there are a whole host of things that you can talk about. The economy is a more challenging one because it is becoming more widespread. You talked about the, you know, the fact that the housing values have increased. That's obviously something that is more widespread amongst more Americans. There is some, you know, variation, though. There was a Pew Research poll or Pew Research report that came out that said about 43% of the American middle class holds the wealth in this country. So right. It's, you know, there's some argument to be made, but I don't think it's a winning strategy for the Democrats.
I don't think so either, particularly when we get velocity of money and it starts to circulate in the economy. But the flip side of this, of course, assets, for instance, are like 788% of disposable income. Could we actually now see a situation where Americans, Erin, get in over their heads, like they get too confident? Could we be setting ourselves up? Because the last time the ratio was like this was second and third quarter 2007.
It is possible. You know, it was great last year because we had this huge wealth effect with the market being up 20%. This year we don't have that, and so you don't have that liquidity. And so by the time you could get out of the wealth in your home, that can easily change. And so that's something that we've seen, basically consumers taking on more credit. We're having, you know, lowering our standards or the regulatory issues within the banking system. And so it is a concern that we could overexpand, or consumers could become a little too confident. I don't think we're ever going to get back to the point that we were back in 07. Right. But certainly it is a concern that we don't want consumers spending too much.
And the dynamics of our debt has changed dramatically, too. Before it was housing debt that was being sliced and diced and resold, and now it's student debt, auto debt. Credit card debt is down. In fact, it's gone down 2 months in a row. So, Chris, handicap it for us. Where we are now, let's just say we stay on this trajectory. Strong stock market. We're near all-time highs going into the midterms. Wages are edging up. GDP maybe this quarter could go over 4%, but let's just say over 3%. I mean, is that the perfect storm for the Republicans?
It is, but, you know, what doesn't work without a message, and that's where the tax cuts come in, because really what those tax cuts gave the Republican Party and Republicans running in 2018 is a signature accomplishment that's easy for voters to understand, it's easy for Republicans to talk about, and frankly, it's really easy for Democrats to sound dumb on, because you got Nancy Pelosi, who seems intent on saying, oh, these are crumbs, we're going to repeal it if you make me Speaker of the House. I mean, what a nice contrast for Republicans to go on Election Day with, hey, vote for me and you keep your tax cut. Right. Vote for her, taxes go up. And that couldn't be simpler overall from a standpoint of creating a difference between the two parties, with the economy being where it is.
Although saying that, well, these people got more than you got, politics of envy, that still seems to work in some places. Thank you all very much. Appreciate it.